All right, today we're going to do a evaluation on the Kohl's real estate portfolio, and it's a very conservative valuation, strictly on the real estate, not on the business portion, which the business without the real estate is slightly profitable. I'd say that it is worth somewhere, if you figured the debt went with the real estate, the business itself would probably be worth about what it's trading for right now on the stock market, in my opinion. The real estate is all on top of that. And then I get into a implied cap rate based on the information here. So all this information is off of the annual report from last year. They have on there they list it as the total sellable square feet that they have between all their stores. So I'm guessing that doesn't include like the back room for like a small warehouse, the stuff that hasn't been put out on the floor yet, or like office space, break space. So, and I'm fine with not adding that. This is a super conservative valuation. But based off of the numbers that they have on their annual report, the average store is 69,847 square feet. And they own 406 locations, completely the land and the real estate. And this is the total square footage between all that if you multiply it out. They have 247 on a long-term ground lease. That's like 50 plus years with all the options, maybe even 75 or something. Each one is a little bit different, but they're all on a very long-term lease with a bunch of 5-year options at the end. And total square footage there, if you add up all these, you come up with 45.6 million square feet on the store end, 653 locations. They have a little bit over 1,100 stores in total. The rest of them that they are just on a pure lease with. I'm guessing that they're going to start closing down the less profitable or the unprofitable ones that they lease as the leases come up, or if there's any leases that they can get out of, because the leases are way more expensive than what I am figuring in these numbers. On the right hand side here is all the essentially the warehouses that they own. They list them as store distribution centers and e-commerce fulfillment centers. It's all the cities that they're in and the total square feet that they're listed on the annual report for. So they own a lot of real estate. This was as of yesterday, Tuesday, February 11th, in the morning that I pulled these numbers. So the current market cap as of Monday's closing was essentially 1.3 billion. Just to prevent a rounding error, I did it in millions. And then the current debt market value, how I came up with those numbers is in this table down here. This is all their bonds that are publicly traded, the year that the maturity date is, the face value of the bonds, and then what they last traded at. So if they traded at $100, it'd be a full value. And down here, this 2045 is trading for essentially 60 cents on the dollar. So if Kohl's wanted to, and in my opinion they should, that say right now they're paying out $222 million a year in dividends, they should just cut the dividend and buy back essentially all of this bond right here and record the gain if they could get their hands on that many of them at this price. Record a huge, let's see what that'd be, 100 and almost 120 $170 million gain or something like that. Very easy money for them, but I guess that's for them to decide. It also would be advantageous for them to buy back shares, but that's not really what this is about in particular. It's about if the company could certainly buy back those bonds, or somebody might be looking at just buying out the whole company. And this total current valuation up here, the essentially 2.5 billion, that's what, not really what you would be able to buy the company for in actuality, because as you would say start taking a large position in the equity, the shares that are traded, the it would go up exponentially. But just for math purposes, the current valuation is about 2.5 billion. They have a total rentable square feet of 55.7 million square feet, and this is where I figured in how much commercial real estate's generally valued on how much rent it would bring in. And this is a very conservative number for the retail portion, and it's on the low end of what the warehouses would bring in, at least if you average it all out. But $10 per square foot in rent per year on a triple net lease, which is the tenant pays the property taxes, insurance, and all the maintenance costs, so there's no landlord responsibilities. That would work out to be a $557 million a year in rental income. There would be the ground lease rent, just for paying the rent on the land that they don't own on those certain locations. And I verified that there's a couple of prospectuses out there they're not still for sale that I could tell, but what they are paying in ground lease rent, I multiplied that out by the amount that they have, and that would work out to be somewhere around $57.5 million a year in ground lease costs. It's an estimate, but it should be pretty close. And if you deduct that from the income, you'd have $499.5 million per year in net operating income. And also, this would work out to be $44.85 per square foot overall average throughout the whole portfolio for a purchasing cost. And here's the real kicker, is that it works out to be a 20 cap rate implied here, which is completely unheard of. And even I'd say anything over a 10 cap, it's going to be like a crack house next to it or something like that. I mean, that's just, it's totally nuts. And the business on top of it's worth something. They have a lot of inventory. They're still profitable. Even if they had to pay full rent on all this, like you could spin off the real estate into a REIT and have Kohl's pay rent into that. In a GAAP measure, they might not be profitable, but on a cash flow number, adjusted free cash flow, they would still be slightly profitable, even if they had to pay full rent on all these, especially at this $10 number. But even if they had to pay more market rent, if they had to pay market rent, they'd probably be about break even. But this is very conservative numbers. At a 10 cap, which is, like I said, that's just incredibly conservative. Whoever would value it at a 10 cap is totally nuts. That's $34.24 a share. That might be like what private equity would want potentially, just to make giant returns, but realistically it would be more valued at probably like a 8 or a 7 cap, which 8 cap would be $45.46 a share. 7 cap would be $53.48 a share. And like I said, the business has a little bit of value on top of that. In particular, it's not investment advice. If for some reason this doesn't feel right to you, definitely don't invest in it. I think that you should pull up the annual reports that I got this information off of and try and understand it. I got all the information on the bonds over here off of website finra.org, and they post all the bond trading information on that for what they last traded for. But 20 cap rate implied is nuts. It can't be held down here for much longer. I really see this thing possibly a short squeeze. That there's over 40 million shares sold short still out of 111 million shares. I think when people start to realize actually what the real estate is worth, it's one thing to look at the balance sheet and see, they paid this much for it. The market value is what's actually important. What could this rent for? what's somebody willing to pay for it? Is somebody willing to pay more than, would you go out and this $44.85 cost per square foot, the average size store, which is over here, that works out to be about $3.1 million to buy what the real estate in the average size store is worth. And that's just totally nuts. If you look on a place like LoopNet, you could just search for LoopNet Kohls, and there are several properties that are for sale. There's like one of them that's more on the cheaper end is one that they're leasing and they're closing down. So, and if there's not a renter in there, it's worth a little bit less, but still, it's not. Their portfolio is worth way more than $44.85 per square foot, in my opinion. And I think that you should run your numbers and decide if this is a good idea for you. If you like it, I would appreciate maybe sharing this with 2 or 3 people that are like-minded, that looking for rational investments, which is what I'd like to share on here in the future. I'm not necessarily looking for something that I think is going to go up 100x or something like that. This is the kind of investing that I do where I go through all the numbers and try and find something that really makes sense. Like if the Kohl's down the street for me was available for $3.1 million, I don't have $3.1 million, but I have enough money that if there were a couple of partners that maybe were interested in buying it, that we could get together a down payment for it, and I would be 100% all in on it, which is why I own a lot of shares here. But yeah, if you would possibly share it with some people and maybe like and subscribe, that would be appreciated, and plan to have another video out shortly. Thank you.